1.7 billion leaving crypto funds. Is it fear or an opportunity? Right, I want to start today with something very important that just happened in crypto. In the last week alone, 1.7 billion US dollars has left crypto investment funds. That is the biggest amount of money leaving crypto funds since November last year. And when I say funds, I'm talking about Bitcoin ETFs, Ethereum funds, and institutional investment products. This is not retail traders on Twitter. This is not people panic selling on their phone. This is professional money moving. Big money, smart money, institutional money. Now, whenever we see numbers like this, the natural reaction is fear. People immediately think, is the market about to crash? Is the bull market over? Should I be selling? But here's the truth. Events like this often happen at some of the most important turning points in crypto. Sometimes this is exactly what happens right before big accumulation phases begin. So today, I'm going to explain what actually happened, why this money is leaving, and what it really means for Bitcoin, XRP, and the market. And how I personally look at situations like this. In very simple language, so even if you're brand new to crypto, you'll fully understand what's going on.
I am not a financial advisor. This video is based solely on my opinion on what I'm personally doing in this market. I also want to let you know that some of the links below and in the descriptions are affiliate links, meaning I may get a commission, but it will be at no extra cost to you. Please remember that under no circumstances will I ever contact you and ask you for investments. You can confirm all of my real social media handles in the description and also at milkshakematty.com. This content is for educational and entertainment only, and I'm not a financial advisor.
So this data has come from CoinShares, and it was reported by Cointelegraph. Last week alone, $1.73 billion was pulled out of crypto investment funds. That is a huge number. To put that in perspective, that's more than many countries spend in a day. That's more than most crypto projects are even worth. And most importantly, this is the largest weekly outflow we have seen since November 2025. Now, here is the breakdown. If we look at Bitcoin, we've had just over 1 billion left. When it comes to Ethereum, we've had 630 million left the market. So between Bitcoin and Ethereum, almost the entire outflow came from just those two assets. And this is important because Bitcoin and Ethereum funds are where most institutional money sits. These are pension funds, hedge funds, asset managers, and professional traders. These are people whose job is literally to protect capital. So when they move money, we should be paying attention. But here's something very important to understand. This does not mean all the money was sold on the market. Prices must crash now, or institutions are bearish on crypto. Often outflows simply mean money moving out of one product and into another place. And I'll explain that in a moment. Now let's answer the most important question. Why is this money leaving? And I want to keep this very simple. There are three main reasons why this usually happens. The first is short-term fear and uncertainty. Right now, the market is in a strange phase. We have uncertainty about interest rates, confusion when cuts will really happen. We've got mixed economic data and no big positive crypto news recently. And then on top of that, we've got global tension when it comes to China, Russia, America, the EU, and now even Great Britain. When markets don't have clear direction, professional investors often become cautious. They don't panic, they don't rush. They simply say, let's reduce risk for now. Let's protect our profits and let's wait for better clarity. And they temporarily pull money out. This is not fear. This is risk management. And this happens in stocks, bonds, gold, crypto, in fact, all the major markets. The second thing is profit taken after a strong move. Now, remember something very important. Early in this cycle, Bitcoin ran really hard. Ethereum moved strongly and ETFs had huge inflows. A lot of funds were sitting on very healthy profits. And when markets slow down, professional traders often do one simple thing. They lock in their profits. Not because they're bearish, but because that's their job. If you manage billions, you don't wait for tops and bottoms. You take profits when the market's slow and you look to re-enter later. So a lot of this outflow is likely to be funds closing profitable positions and booking performance and preparing for the next phase. Again, this is completely normal behavior. The third thing to look at is rotation of not leaving crypto. Now here is the most important part of this entire story for me. While Bitcoin and Ethereum saw outflows, some altcoins actually saw money coming in. For example, Solana funds saw around 17 million of inflows. Chainlink also saw small inflows. So what does that tell us? This money is not all leaving crypto completely. It is rotating inside of crypto from large caps into selective altcoins. This is classic mid-cycle behavior. In every bull market, money flows like this. First Bitcoin, then Ethereum, then the other large caps, and then selected altcoins. So this data actually fits very well with a market that is consolidating, rotating, preparing for the next phase and not collapsing. Now, this is the part that most of you probably care about. What does this actually mean for price? There are two realistic scenarios. Scenario one is short-term volatility. If outflows continue for several more weeks, we will likely see choppy price action, more sideways movement and bigger wicks and more stop hunts. And probably more people from retail like me and you getting frustrated. And I want to say this very clearly. That would be completely normal. That would not break any kind of bull movement. That would not mean crypto is over, and that would not change the long-term trend. It would simply mean the market is digesting gains, the market is resetting sentiment, and the market is shaking out weak hands. And this phase is uncomfortable because prices stop moving, excitement fades, and people lose patience. And that is exactly when mistakes happen. We are seeing this all over social media comments right now. People are getting pissed off that the prices aren't moving. Their excitement has faded and they are losing patience. Now, this is the really interesting part because historically, some of the best buying opportunities in crypto come right after large ETF outflows, negative headlines all over social media, and extreme fear readings on the crypto fear and greed index, and then retail losing confidence because while public money looks scared, private money often starts accumulating quietly. And we're already seeing signs of this. On-chain data already shows large wallets increasing their balances, long-term holders not selling, and exchange reserves slowly falling. So sometimes outflows do not mean selling pressure. They mean money moving off public products and into private custody, ready to be deployed later. And this is something most people misunderstand. Institutions don't always buy through ETFs. Often they buy OTC, they buy privately, they accumulate quietly, and they avoid moving the market. So outflows from funds can actually happen at the same time as accumulation elsewhere. Now let me share exactly how I look at situations like this. This is not advice, this is just my personal thinking. Whenever I see big outflows, negative headlines, fear returning, and price sitting near support, for me, that is not a time to panic. That is usually a time to slow down, a time to be patient, and a time to think in months, not days. Because here's the biggest mistake people make. They only want to buy when prices are rising. They only feel confident when YouTube is bullish, when Twitter is excited, and when everybody is making money. But that is usually the worst time to buy. Be honest with yourself. How many of you have bought crypto during a peak because everybody on social media was excited? It's backwards. The best positions are built when markets are boring, headlines are negative, sentiment is weak, and price is quiet. This is where risk is at its lowest. And this is exactly why most people lose money in crypto. They buy excitement, they sell fear, and they chase pumps. And then they panic at the bottom. Whereas professionals do the opposite. They buy the fear and they sell the excitement. And right now, we are slowly moving back into fear again. And historically, this is where opportunities start forming. Quick side note before we continue, if you're newer to crypto and you're still trying to understand how to build positions, how to manage risk, how to avoid emotional mistakes, and how not to get wiped out, I do have my free crypto liftoff course linked in the description. It's completely free and designed for beginners, and it teaches market basics, position building, risk management, and how I personally approach markets. No hype, no signals, just foundations. There's a link in the description and it's 100% free. Right, back to the market. There are 3 things that will tell us exactly what happens next. Number 1 is, do the outflows continue? If we see another week or another 2 weeks of the billion-dollar outflows, that increases the chances that we see a deeper consolidation. But if outflows slow down, that usually means selling pressure is exhausting, confidence is stabilizing, and accumulation is beginning. This is the first signal that I will be watching for sure. The next is the fear and greed index. Sentiment is extremely important. And when fear returns to extreme levels like it is right now, historically, that is one of the strongest long-term buying signals in crypto. Not because price must rise immediately, but because risk becomes very low, downsides become limited, and upsides become more likely. And this is where the smart money starts positioning quietly. The next thing to watch is whale activity. This is the most important one, to be honest. If whales continue accumulating, increasing their balances, reducing exchange supply, while funds show outflows, that usually means public money is scared and private money is preparing. And this is exactly how the next leg of every cycle begins. Now let's zoom out, because short-term data often distracts people from the big picture. We are currently post ETF approval, seeing institutional adoption. We are early in a regulatory clarity phase and still extremely early in global adoption. Crypto today is where the internet was in the late 90s. Big potential, high volatility, and huge opportunity. 1 week of outflows does not change that. So what it tells us is this: we're entering a phase where patience matters more than excitement, where strategy matters more than predictions, and where emotional discipline makes the difference between winners and losers. And these phases are where long-term wealth is built, quietly, slowly, without the hype. Before I wrap this up, a quick mention: a brand new episode of the UK Crypto Podcast is out now. As you know, I host this together with Paula Talks Crypto. We go much deeper into market structure, regulation, XRP, Bitcoin, and what's really happening behind the scenes. New episodes come out every Friday at 7 p.m. UK time. And at the end of this video, I'm going to tag the latest episode so you can click straight onto it and watch it immediately. Definitely go and check that out after this video. So let's summarize very clearly. 1.7 billion left crypto funds, mostly Bitcoin and Ethereum, likely short-term fear and profit taking, and rotation into selective altcoins, and not a long-term bearish signal and its possible accumulation phase forming. And the key lesson to this: big money leaving funds does not mean big money leaving crypto. Sometimes it means big money preparing for the next opportunity. Let me know in the comments, do you see this as fear or opportunity? And as always, if you found this useful, hit that like button, subscribe to the channel, and I'll see you on the next one. And remember this: the strength of the wolf is in the pack.